afternoon. Welcome to everyone on board. I trust we're going to help you to get the funding that you're looking for. And I have my two hosts today, Yolanda Mabuto and Rudolf Evert, and just maybe a short introduction on both. Yolanda was still employed when I met her, and I met her as part of Women in Energy or Electricity. So she made the journey from having employment or being employed to running her own setup, which is, Yolanda, if I must guess, it's most probably 5-6 years now. So I always say I don't want to spend too much time on what they've done. If you want to find out who they are, go and Google them. You'll find a lot of references. The other person on, Rudolf and I, we don't know enough people. So we've worked together 4 or 5 times for different companies, starting with government. And we are now partners in a company called Pendu. Rudolf also has his own company called One Partner. And I'll leave it to them if they want to add something more than that. Right, then one of the most important things on our webinars, we want to start with what do you take away from the webinar. So between Rudolf and Yolanda, they've set up their presentations, which we will share via email for everyone that's registered. Then Rudolf has also done a write-up on the requirements from investors for different types of funding, whether it's for projects, materials, bridging finance, which he will discuss. So we will also share that Word document with you, as well as the tick sheet on what do you need to be ready with if you approach an investor. And when it comes to opportunities, I've made a list, let me call it what you can go and research on the different entities. We specifically in funding don't want to reference a specific entity, but we will assist with that. And at the end, I'll give you the list of where I think you can go and search. Then beyond that, before I'm going to hand over to Yolanda to take us through her presentation, or her portion, we've received 9 questions. And what I like to do is to have the questions up front so that the panelists can actually answer as they go, rather than leave them to the end. So here we go. The first question was, how do I access funding for manufacturing? Funding options available, and what do you have to do when you apply? And there's also another question, what do you do if you apply and you receive nothing? How does one as a startup access funding? Why is it so difficult for small businesses, especially Black female business owners, to acquire funding? How long does it take to approve a loan? As a social entrepreneur with many products in hand, I need balance between economic benefit and sustainability, and a sustainability plan. How do I go about doing this? Interested in the discussion? Please advise on funding options. What are the requirements for funding? And as I said, Rudolf's done or created a Word document that will guide you. And how does one get funding as grant funds for startup companies? And I'm fairly sure we're going to address that as well. So without ado, Yolanda, if you're ready to go, you can fire.
Thank you very much again, Corey, for this platform. It's always interesting to be part of discussions that are solution-based. And as the global community, we are all facing challenges. But having such platforms is giving us, as I would say, the global leaders and business people, an opportunity to learn from each other and just to discuss and come up with solutions. I'm Yolanda Mabuto. As introduced, I am the founder and CEO of Divine Growth Solutions. I'm also an international partner for World Business Angel Investor. And I think it rhymes with the theme for today, why I am the speaker for today, because I stand as an investor trying to connect the SMEs with possible investments locally and abroad. And briefly, I'm not gonna take much of your time. My content is very quick and easy. I'll just introduce you into the SME landscape, the types of fundings that I will share with you. And I know my colleague Rudolf will also delve deeper on what type of fundings you can tap into to build and grow your businesses, as well as what local funding is available and international funding that you can tap into and grow your businesses. I felt it's very important to just give a brief introduction, in the importance of SMEs, not only in South Africa, but in a global community as well, because SMEs are the key drivers of employment in any country. That is why it is important for funders and for the government to support SME initiatives, be it through grant funding or create possible platforms for them to be able to get funding and grow their business, which are then in turn adding value into the economy. So my next slide is really the results of the survey that was conducted late last year. And I know these numbers have changed because of COVID-19. Some of the business have been forced to close down and therefore result to unemployment. And briefly, in terms of the SMEs, as I said previously, that SMEs contributes into the employment of the country. And as you can see my numbers there, we've got about 47% of SMEs that are able to employ 2 to 5 people. And that is a big contribution for families within our communities. We also have some of the SMEs that are employed, 39% of the SMEs are employing over and above, the number that I've just mentioned. So this just shows how important the SME development is, how important it is to link SMEs with possible funding so that people don't lose their jobs and also SMEs are able to reach their goals and plan in their strategies. And 59% of SMEs that we have, some of them are less than 3 years old and some of them are 26% is more than 5 years old. So we've got a number of SMEs that have been in the journey for quite some time. And we know it's a journey that needs people who are resilient. And I am sure in this webinar, we've got such, SMEs that are resilient, and hence you took part in this webinar to be able to learn 1 or 2 things to support your SME or to support your ecosystem. And really, because I'm very passionate about gender equality, I had to have this one, which shows the percentage of gender in terms of SME leaders. We've got about 52% males who are leading SMEs, and we also have 47. And again, let me just point out, this is just the survey for a certain group. So it could be different for other groups. This is just based on the results for those who took the survey. And in terms of racial equity, we've got about 72% Black-owned SMEs, and we've got about 12% white-owned SMEs, and we've got 5% Indian-owned SMEs and 9% colored-owned SMEs. So we're making some stride there, and I'm sure we can do much better than that as an overall racial community. And in terms of the owners of the SMEs, we've, as I've mentioned previously, that some SMEs employ 2 to 5 people, up to 50 in some extent. So it is really key for us to support SMEs. And the one critical and very key part that I will close on in this slide is the support that SMEs are getting from the government or from the various departments. Based on the survey results, 94% of SMEs indicated that they've never received any funding or any type of a grant from the government, and 6% indicated that they've received. And I'm sure that number can be improved based on such discussions that we're having today, where we are opening up opportunities and giving you information on where else to tap into, because sometimes we say people don't get support from the government, but they just don't understand which door to knock on. So we'll be trying to unlock those doors for you today. So I'll just browse through the types of funding, because I know Rudolf will dwell on that one as well on his presentation. We've got one which is self-financing, and I know some of people do that and most people don't. Some will get the money from their friends or capital from their family and friends. We've got an angel investor type of fund, which is also very important, and I will dwell on that on my next slide, which will be related to my association or affiliation with the World Business Angel Investment Forum, which deals directly with angel funding and angel investing. We've also have venture capitalist, which is also a new type or another very helpful type of funding that SMEs can tap into. And we have bank loans, and again, with this type of loan, we've had a number of SMEs sharing their frustrations around the red tapes, around going to the banks and getting some funds. They have not been very much success stories there, but I'm sure it is something that we can change as a SME community. We also have a crowdfunding, which I think it's something that we should advocate, especially during these times of COVID-19, where funding seems to be a bit of a challenge to some and in some sectors. There's also bridge loans that people can tap into and try and release the pressures that they are feeling right now during this time. And there's also government grants, which we have seen, I'm sure, during the COVID-19 challenge, where the government was coming on board to give certain grants to certain businesses, obviously looking into the dire need in the nation. So we've seen a number of those grants being given by our government. And it's not only happening during this COVID period, but this is something that happens a lot, but it just needs one to position themselves and understand where and how the opportunities can be made available for their businesses. It's very important as well to understand the sectors that we operate in as businesses. And when you try to sort of position yourself as a SME, wanting to understand where and how is my sector being supported by the funders out there? And this relates to any type of funder, be it the funding from the bank, the funding from the government, and the funding from private funders. So as you can see, I'm not gonna dwell much on the screen because you will get the presentation afterwards and you'll be able to look. But the highest sector that is highly funded is infrastructure. And again, this is based in 2019. Things could have changed because of COVID-19. There's a lot of manufacturing that took place during this time. And also there was a huge focus around health because the challenge that we are facing is really related to health. So we've seen a number of support geared to health, but according to the results that I'm sharing with you, as per 2019, the highest funded sector was the infrastructure and the lowest was the construction. And I mean, there's a number of funding houses that funds different types of businesses, and I will get into that on my next slide. I've listed the number of houses that you can tap into, funding houses rather, to be able to strategize and put yourself in a way where you are able to be funded. And one of those will be the NYDA. They've got a number of initiatives and programs that SMEs, obviously you have to be 35 years and younger to be able to tap into these opportunities. And I know with our audience in this webinar, we also have young minds that are also looking to grow their businesses. So NYDA should be one of the doors that you are knocking into to make sure that you tap into the support for your business. And there's SEDA as well. SEDA is also playing a huge role in supporting SMEs. I will not name all of them, but I can say that if you want more information about all these organizations that are listed here, you feel free to contact us. We'll be able to locate you to the right contacts that will be able probably to help you based on your needs and based on what they would deem viable for their businesses. As I've mentioned earlier, that I'm the international partner for the World Business Angel Investment Forum. And this is an organization that is affiliated with the G20 Global Partnership for Financial Inclusion. And we believe in including each and every business to make sure that businesses thrive because, again, they add value into the global economy and the GDP of each country. So we've got a number of initiatives that I can open up for South Africans and Africans that are interested to tap into these opportunities. And one of those is the Angel Investor, where we have a number of funders who are willing to fund businesses that are viable, businesses that have a potential to grow so that they add value into the WBAF community as well as their countries. We also have global funding summits where, again, we have a global community that sits and look at the startups and the kind of startup that are coming on board with good innovation, with viable businesses, where there is no border in terms of the country. As long as your business is viable, you are able to be supported through mentorship, through financial inclusion, being given a number of opportunities for your business to grow. We also have the global foreign direct investment stage where we, like I said, these are international partners that are coming from different countries and they're able to seek funding and they want to invest in certain countries. And these are the opportunities for SMEs and for startup from Africa and South Africa to get funded and to be funded and to be matched with a foreign investor that would see value in your business and want to grow with you, then the terms of engagements really will be between the businesses, but it is nurtured by the WBAF to make sure that it's a beneficial engagement and initiative. There's also FinTech Summit, and I know with what we are facing right now, technology has played a huge role in allowing us to be able to connect with each other. So that's why it's very key and important to include tech businesses. This is a platform for tech businesses to be able to be supported and come up with even better innovations that will be able to respond to the global challenges that we are facing as the global community. So these, again, are the opportunities that are open that one can tap into and be funded and also be part of a bigger global network that will grow their businesses. We mentioned the global fundraising again, where there are initiatives that are able to get fundraising based on what is your ask from the investors. So again, this is a platform where international community is opening up its doors for businesses from Africa, from South Africa, from wherever, to come and play a role. And one thing that I would like to mention, that as Divine Growth Solutions, we are able to support businesses during this time, is being able to advocate capital raising for businesses. But again, these businesses must be able to have contracts, obligations, and also purchase orders that are ready so that they are able to be supported. So if you are right now in this webinar and you are seeking such capital and you are seeking such deals that you want to be connected with, this is something that you can do, again, based on what your need is. As the partner of WBAF, we advocate a lot for making sure that we include businesses in the financial things on the businesses. Then I will close with the tips that I want to give to the SMEs, because it's very important to understand your business before you can even go out there and seek funding. You must know your product, you must know your service. And also, as I've mentioned, a number of initiatives in the funding space that you can tap into, there are also fine lines in each funding opportunity. So some funding will require you to sort of let go of a certain equity. So you must ask yourself, am I willing to give 5%, 15%, 10% from my business so that I'm allowing it to grow? These are the things that you must think before you go and approach certain funding, and you must understand what type of funding that would speak well to my business. And really be different as a business. You must try and answer a challenge that is unique in the market, and also what makes you different from other businesses that are also looking at the same funding that you are looking at. So always try to be unique in your endeavors to get, to answering the challenges of the sector that you are serving. And also make sure that your business is creating revenue, because we all know that investors want to understand what's in it for me, what is the return on investment. So even you yourself, when you are an investor, you would want to know, fine, if I invest in this business, what is the return that I'm getting? So these are the things that we need to think about as SMEs, because sometimes we just want cash, we just want funding because we've got a challenge at the moment that is an urgent challenge. But again, it is very key to understand, will there be a return for the investor that will be putting in some capital in my business? And really stay connected. It's very key to stay connected in similar initiatives like this webinar and other associations that are out there. And as Divine Growth Solutions, we've got a number of associations and platforms that you can connect with to be able to get information that is accurate, to get funding that would suit your business. So be part of a group and form part with enterprise development, because it is also very key and important for investors to be able to get SMEs that are in a very organized platform. So that's why I'm saying enterprise development is something that you can be part of to make sure that you position yourself. And again, before I just finish, if you want more information about the founding organizations, please feel free to contact us. We have a list that we can share so that you are able to know, this is my sector and this is where I can find it. Because when we do these webinars, we want you to be able to take something out of these webinars. It mustn't just you listening to us speaking, but you must action after these webinars and get value from your time. So without wasting any time, thank you so much for listening, and thank you, Corey, for giving us the opportunity to share information.
Yolanda is always very knowledgeable, very informative, and spot on. There's no such thing than not having success if you follow the right recipe. As I said, when I met Yolanda, she was still employed, but she followed the recipe and she listened. And I'm going to give my summary after Rudolf spoken, but one of the most important things in any form of funding, any form of business, is your networking capabilities. Who are you connected to? Because even in the money world, there's a money network. And if you're not connected to that network, it's extremely difficult to get access to it. I've written down 6 or 7 points, which I will discuss, but I'm going to go over to Rudolf. Rudolf, thanks a million. You go and give us your input.
Okay, Corey, thank you very much. Let me also share my screen that I'm not in your face. They say I've got the perfect face for radio. It's actually quite nice. I do have compiled just a short presentation. A lot of the content fits in with Yolanda's, what Yolanda just touched on. What I thought when me and Corey chatted, and just to be part of this webinar, is just to touch on more of our frustrations and our experience in facilitating funding between the funders and the lenders, and what we see is happening and why people are not getting the funding they require. Just some practical observations. From my side, good afternoon, everybody. I'm Rudolf Everett. Corey mentioned we know each other from the time we had hair. We are co-founders of Pendo Energy Solutions and also founder of one partner, Pendo Energy Solutions, more in the energy space, very much in development framework. And then one partner also in the development and project space, where we try to facilitate projects, get funding for it, or facilitate the funding. I'm not a funder myself. I did my MBA just to understand the business around my own industry, but I'm here more about the practical pitfalls that I see SMEs step into and end of the day don't get funding for it. Let me sort of, without further ado, I'm just quickly going to get an overview, funding types. Yolanda quickly touch on it. Very important slide, which I'm going to focus on, is the common challenges faced by SMEs, and then a summary, quite important as well. On the overview, and this is actually more of the conclusion, I decided to kick off with a conclusion. And why do you need money? Where's the source come from? You need to understand the pros and the cons of each type of funding. I'm not aware of any perfect funding, except if somebody gives you mahala money, but that also makes you lazy, so maybe that's a con. Then also understand at the end of the presentation the criteria for your business. If you need money, is it suited for your business? Will it tick all the boxes? Aren't you putting your business at risk by taking funding? Some people are so glad to get hold of some funding, they ignore the risk, and when everything is dust is settled and business as usual, they realize, oh, I'm in for something I didn't anticipate. So I think the most important question one needs to answer, that is one needs to ask in my mind, is why do I need the funding? Yes, you want to grow, you've got a new purchase order or whatever. You must go and sit and say, can't I raise the funding myself within my existing structures? And I've just listed this whole presentation. It's obviously not all the funding types, but it gives you a good background. Also in your business, look at your business. Can't you increase your debtor days? Go and talk to suppliers. See if you can't decrease your debtor days. Cash on delivery, buy in bulk. It sounds counterproductive, but everything goes back to cash flow. Can I do some process engineering like stock turnover? My stock turnover is 90 days. I can bring it down to 30 days and have a considerable capital saving and interest saving. What synergies do I have in my business that I can use to generate additional cash flow? So always look within first to see, do I really need to take the risk for other cash flow and funding? And it's all about cash flow. To get your cash flow positive, to get it strong, to support your business. The three fundings I'm going to go into is grant funding, equity and loans. Grant funding, as Yolanda mentioned, that is a non-repayable Mahala money, which you get. There's several government initiatives that provides grant funding. There's from time to time private, international private funds that either distribute grant funding as part of the CSI initiative. Obviously, there is tax incentives. So one needs to know about it, and one needs to go on the web. This takes work. The money doesn't come to you out of the blue. You need to go and look for it. Go on the web. Go and search. There is, at any given time, a lot of local and international funding that offers grant funding for specific industries, sectors, but one must do the work to get to it. Just a moment. The second type is equity. And this type of funding, the funder will typically would like some equity in your business, a share in your business in whatever format, where it's a direct share in your business or future dividends, whatever they want, but they would want to be involved in your business to minimize their risk, to see where the money is going, and have obviously a upside to it. Yolanda quickly touch on it. I will, Palesa will distribute the slides plus a small write-up just explaining the presentation. Bootstrapping is from a business itself, and they get self-funding, friends and family. Yolanda touch on angel investors. Cloud funding is becoming extremely popular, and from your partners, venture capital, and then also very popular is crowdfunding, where instead of one person giving you R1 million, 1 million people give you R1 each. So getting more and more popular, and also the funding, how you apply for the funding is changing with technology, as Yolanda mentioned. The third type of finance is debt finance. So we all know it. Typically, your banks, you go to a bank, and they would like their money back. For them, it's business. They make money from money, so it would be interest rates, and you have FD contracts or agreements to pay that money back. You can go to small business lenders, your SBO loans, banks, and what these guys are looking for, they are not in the game of risk. So they would say, okay, why do you want, if I give you the money and you default, I need to have some surety and a guarantee that I can get my money. If it's not from you, something else. So you can, various ways. And like I said, I only mentioned a few samples in this presentation, is you can do it on the back of purchase orders. If your client is, let me put it that way, also credit worthy. So they have to look at who issued the purchase order. You can then borrow it against your assets, your bulldozer, your trucks, your whatever. You can do it against payment guarantees on construction projects. And obviously there is some methods of getting money through your debtors or your outstanding invoicing. More examples are available, but this is just to give you an idea what's the difference between grant funding, debt funding, and equity. And this is a slide I would like to get to. And this is our frustration from our side, where we are the intermediary between lenders and funders a lot of the time, where the small business owner fail or get stuck in a pitfall, where they're not able to communicate their goal, their vision, their dream for their company. So the funder can't understand what the money is for. And it goes in hand with companies don't have a strong business plan. So if you read it, you must understand where the money is going and how am I going to get my money back? And is that plan clear, operational wise? A lot of the guys don't understand the funding models between equity, loan funding, and which funding type are for which type of bridging. So it's very important to understand the different types and where each one plays their role. Then funders are quite knowledgeable. It's their livelihood, it's what they do. And the quickest you lose a potential funder is to have unrealistic projections. So listen, I'm going to manufacture or deliver this X, Y, and Z. I can quickly see, but you haven't calculated all your factors, all your expenses, all this and that. They lose confidence in you and your business plan if you're unrealistic with the payback and you say, listen, I'll pay back this money in 2 years. And the funder knows it's a 10-year payback period because you haven't calculated everything. A lot of the guys, you must understand, if you want money, you either have to pay all the interest and whatever from bank if you are able to. And if you go for equity type of thing, which does not necessarily have interest rates and stuff, you must be willing to part with some equity, a portion of your business. And a lot of people have put their heart and soul into their business. And obviously there's an emotional attachment to your business and you don't want to give it away. So you must think like a business person there. So to grow, I need to do certain things, and am I willing to do that? And then quite a big thing is where people get a bit desperate and are willing to take any type of funding or any type of deal, and when it's time to pay back, they realize, oh shucks, I've signed a 30% interest rate, or this guy is taking 80% of my business. So if you're desperate, don't get emotional. One of my last big things that I've seen the last year is which I generally ask the people that the lenders is, if it was your money, if you're looking for 2 million rand and for your business, I always ask the guys, if you had 2 million rand and that's all you have, would you put it in this type of business to bring you returns? And a lot of guys said no. And if you don't believe in your business and you're not willing to put your own money in there, the chances are zero that a funder would put his money into your business. So be realistic, evaluate it, and decide, is this worth my own money? Will I put my own money in this business? If that answer is no, you have a couple of challenges. And then just to end off with, and I just put a couple of points here that I want to reiterate. First decide, do I really need the funding? Can't I do something else not to ask for funding? Understand the pros and the cons. What's the perfect type of funding for my predicament, for my business, whether it's manufacturing, services company, whatever. Understand that. Minimize your risk. Understand the terms and conditions of financing, the interest rates. Understand what the medium to long, or short, medium, and long term impact on your business, the funding will have on your business. Then if you get funding, make it count. It's expensive money. You're paying interest on it, or you've given away a portion of your company. Make that money work for you. Don't spend it on unnecessary thing. It's there for working capital. Make it count. And again, do the little check in beginning. If it was my money, would I have invested in this business? Yes or no? And that's just my take on what we have experienced as intermediaries between funders and lenders. We're happy to answer more questions. What I am going to do as well is we will share my summary with you so that you can see what lenders are generally looking for when they're giving you money. I hope I answered the questions. Maybe we can go through the questions, Corey, if the ones I've missed, maybe one or two. I did answer them all in writing yesterday, but we go through. That's my 5 cents on the practicality of the link or the relationship between lender and funder. Understand each other, and otherwise there'll never be a relationship. Thanks, Corey.
Yeah, Dolf, spot on. Thanks a lot. I think what's important, Dolf, the questions that you answered in writing will also distribute via email. As I said earlier, we will distribute all this via email for all the registered people. So we try and keep our webinars to 45 minutes. Everyone's running around. But I generally say when we lose 10% of our participants, I know it's really time to finish up. So I'm going to spend 5 minutes in wrapping. I think one of the most important things are any business needs a good business plan. And as Rudolf always says, write the business plan even if you throw it away. It just makes you think. You need to write the story that someone's willing to part with their money to support your endeavors. And the other side's also true. I mean, if someone wants to borrow, I'm not talking family. If someone wants to borrow money from you, you go through a list of questions. What do you want to use the money for? Why do you want to use it? When I'm going to get it back? So your business plan must represent you when you're not there in telling your story to the point that someone will part with their money at a cost. The cost generally is a return for them or shareholding, which I'll chat about a little bit down the line. Then it's all about, I mentioned earlier, it's all about networks. If you enter as Yolanda was saying, she's part of an international angel investor network. And those angel investors and investors link up with people that understand the criteria necessary for money to flow. That's why you have to partner with people like that. And it comes with its own price. Sometimes it's some equity, sometimes it's a fee, sometimes what you can do. I mean, I was just on a webinar before this one where we discussed borrowing, and one of the things you can do in a business is to say to someone, come and help me with my business plan, come and help me with my application for funding, but I can't pay you. But when I get the money, we can share. You can take a percentage of what you got me. And there are, I mean, you go and Google them, there are companies that apply for funding. Then the next one, don't limit yourself to the local market. I think South Africa is seen as a middle income country, so it's harder in South Africa towards the rest of Africa to borrow money, especially to get grant funding. But don't limit yourself, look at as wide as possible, share your story, write it in a way that people will participate. It's about value exchange. The moment they feel they can add value, a lot of people worldwide want to spend money in the forms of grant funding, but there's prerequisites because the queue is endlessly long. The one with the most value will most probably acquire the funding. Then Rudolf mentioned it, Yolanda as well. Funding is a business. You need to understand the funder looks at you as a potential income. And one of the things is the price of funding. Rudolf and I had an engagement with a massive international company, and they approached us with 3% funding, a loan of 3%. And when we sat down, it was 3% for the loan, 2% to protect the exchange rate, 10% admin or agency fee, 6% to insure you against your own debt, and another 3%. So it actually came to about 27%, which they take up front when you do the loan. So you apply, you get for every 10 Rand, they take 3 Rand, they only give you 7 Rand, and you are liable to make 10 Rand. So understand the cost of funding. And there are different fundings for different things. I think one of the things, it's when you're so desperate for the money, you enter into an agreement that actually is going to cost you your business. Be aware of that. One of the things that wasn't mentioned, and maybe it was, is I see a lot of people in my environment that takes early payments, like a 7-day payment from a client at 10% discount or 15% discount. It's also a form of funding. You get the money earlier, but you pay 15%. You pay a price of 15% on it. What's important is also, I'm going to give you a few keywords of what to Google or what to research. It's not necessarily Google, go to the internet. The funding companies are normally known as funding trusts, grant funds, foundations, government entities like DTI, and don't underestimate the big companies, because they also look at future partners, and their upside is actually not to take from your business, but to grow you into a future partner, which a lot of times lead to very good support in terms of finance and also business acumen and how to do your business. And I would list that under another name, which I call internships. Some of the big companies have sponsors and internships. So they take you and your business idea without taking equity from you and build you into a partner with funding, or they will actually source some of their work to you. In South Africa, we have legislation that says 30% must go to small companies. That also relates to the CSI environment. Bottom line, and I think Rudolf and Yolanda mentioned it, that funding is a lot of homework, but the person who does the homework, or the business that does the homework, will get the funding. Then, as I said, there are fundraising companies that you can also engage in that will take a part of the funding when they have acquired it for you. Yeah, that's basically the list, and I'll provide the list as well that you can go and do some research on. And then the last one we've got, I mean, the biggest turnout to date on this, so it means funding is most probably the most important business thing. So we will be, so every Thursday we do a webinar called SMMEs Where To From Now. We are all, Yolanda, Rudolf, previous speakers, we are all small businesses ourselves. We have big and small businesses. So we don't speak as, we speak as small business owners, and we understand the endeavors to try and stay alive in an extremely competitive and volatile, a VUCA world, if you, for the lack of a better word maybe. So please join us also with our future webinars, and let's work together as a team. I really enjoy the questions we get, because it also helps us to think about tomorrow. And one of the questions that I got was, how much do I give away in equity without losing control? It basically boils down to only one thing. And Rudolf and Yolanda, if I missed the point, please assist me. It's about your company MOI. So the company MOI and the directors, shareholders agreements will dictate whether any decision can be made 50+1, special resolution. In our case, our company's control is given away when you have less than 50%. Because when you go to a vote, the vote's generally 50+1 makes a call. But in the MOIs, some of our, what we call special resolutions, let's say we change the type of business or we want to go borrow money, that calls for a special resolution. And that can be anything from 50+1 to 100% consensus. I know for ourselves, we sit at 75% of the shareholders must vote for a change before it can happen. So control depends on your MOI and what the MOI says about who rules in terms of when you go to vote as shareholders. And just maybe for those that's not part of bigger businesses, the bigger businesses will constitute or is started by shareholders. From the shareholders, they will select the board, which will be responsible for the operations of the company, which will select their executive team and CEO. So also just keep in mind when you talk about control, that shareholders don't have operational control. That you give to your directors and they give it to their CEO, which reports back to the board. So, and maybe we'll have a webinar and exactly explaining what does it mean of how much do I give away without losing control of my company. And to conclude, people will look for two things. They will either look for part of your company if your business idea is very specific and very well thought out in a niche market. Or on the other one side, they would want actually to have financial gain from the money that they borrow you. And that is why there's a lot of preparation that need to go in there. So to conclude, thank you for joining us. I really trust this was helpful. As I said, the webinars is based on the fact that we want to make a contribution, work together, learn, meet new partners. Please drop us an email if you need any more information. We will send out what I promised you. Have a wonderful day. And the first emails or messages coming through, very helpful. Thank you for finding it helpful. And we will see you in future. We will be back next week, Thursday at 11 o'clock with a new topic. Please just follow the social media. Enjoy your day. Thanks, Rudolf. Thanks, Yolanda. Thanks for your contribution. I think it was perfect.